David in the studio was just asking what the mood is like here at the summit. What are you hoping to gain from the next few days of talks here in China with your BRICS partners?
Well, there's been quite a lot of interaction with our officials in the contact group on economic and trade issues. So they've been developing the areas of cooperation that we will be agreeing on as ministers of trade. There was previously a meeting of ministers of industry that I attended, and all of this will feed into the summit, which will take place at Xiamen next month in September. So I think that there's a business-like approach and a number of very, very important issues that are on our agenda as trade ministers.
To what degree do you think the trade tensions between some of the BRICS nations, the geopolitical tensions, are leaving this partnership between the BRICS less relevant than it once was, do you think?
Well, I think that BRICS remains incredibly relevant at the level of trade and economic relations. It is the most significant grouping of emerging economies in the world. But what we're facing now, I think, is the common challenge that there is this phenomenon called the New Industrial Revolution or the Fourth Industrial Revolution, with a huge change in technologies, digitization. And the question that's before all of us is how is this going to feed into an inclusive growth process? In South Africa, we have long seen that our place in the global division of labour as a producer and exporter of primary products is no longer a place that we can afford to be in if we want to overcome the challenges of poverty, inequality and unemployment in our country. So industrialisation has been a key issue for us, along with the rest of the African continent, but now it's taking place in a different context. And so as these new tools become part of the landscape, like electronic commerce, we need to make sure that electronic commerce becomes a tool of greater inclusivity and not a tool in which one of us who may be stronger is able to dominate the landscape at the expense of others. It has within it the inherent possibility of win-lose solutions, and I think it's for us in a grouping like this to find the win-win solution so that we are all equipped to address issues like digital divides. And as far as we're concerned in South Africa, we're in the process of developing our own digital industrial policy, which, like our regular industrial policy, will inform our trade policy stances. So I think that these are some of the challenges that we face, all of us. How do we move forward and how do we produce stronger cooperation, stronger partnership in these kind of areas?
And also the question of how South Africa addresses its deficit with China. Is that something you've brought up with your colleagues here, and what steps can be taken to try to mitigate that?
Yes, indeed. I mean, a number of years ago when we first signed the Comprehensive Strategic Partnership Agreement bilaterally, we talked about a structural deficit in our trade. At that stage, it wasn't a huge deficit per se. And the structural deficit was that we supplied raw materials and imported finished goods, and we needed to increase the proportion of value-added products. Well, now, with the commodity prices having fallen, that has translated into a very sizable actual deficit. And I think that what we conveyed to our counterpart bilaterally this morning is that we're going to have to work together to address that deficit. And one of the tools is that there is an expo of imports next year, so we'll participate in that, but we also look into more buying missions. So I think if we don't work comprehensively to address the deficit, we won't be able to continue to increase trade in the kind of proportions that
China could do more. Is that your message?
I think our message is that we want to work with China to do more. We're also looking at investments. I think that's really important. We do have a number of Chinese investments in manufacturing space, and I think they're all having quite a good experience in South Africa. Our manufacturing economy is capable of supporting and sustaining quite diversified exports. So one company that's involved in electronics, TV, fridges and so on is having a very good experience in South Africa, but we're looking to expand that, and we've got a number of projects that are on the cards, and we're looking to expand those relations.
Now, the mining sector is still crucial for the South African economy. Many economists now saying that they expect output to decline towards the end of the year. Is that a view that you share?
Well, I think we've got some challenges in the mining sector. Those challenges are to some extent global. The commodity super cycle ended in 2012. We don't get the prices we used to get for our mineral exports. which says to us we need to move into more value-added activities. We do have a number of projects on the go. For example, fuel cell manufacturing, which is taking place in South Africa based on platinum as a catalytic converter. We are producing titanium powder. There's a number of projects like that are on the go. We've got to promote a high level of confidence among investors who are also going to have to embrace the idea of greater inclusivity and a more diversified ownership pattern in the mining sector.
I wanted to get your views on what's happening in the High Court in Pretoria later today with the Reserve Bank pushing to have this ruling by the anti-graft ombudsman that would effectively change its mandate. They want to get that overruled. Presumably you side with the central bank on this. Do you? And how concerned should we be about greater politicisation of South Africa's institutions?
Well, I think that, the recommendation that was made by the public protector, she already said she wasn't going to oppose the action of the Reserve Bank. So I think that there's been quite a lot of rethinking about that. In any case, if it was to happen, and the mandate were to be changed, the constitutional mandate were to be changed, I think there are all sorts of issues that whether the public protector can instruct Parliament to do that, and whether there would be a two-thirds majority in Parliament for a change of that sort. I think these are matters which I think people are beginning to confront right now. So I have no doubt that the integrity of the Reserve Bank will remain intact. Its operational independence, which is constitutionally enshrined, will continue even if this amendment were to go through. The goal of the Reserve Bank is in any case set in consultation with the finance minister, and it moved a little while ago from narrow inflation targeting to more flexible inflation targeting. So I think we've also got to explore what room there is in that regard. I mean, the last interest rate decision they made was also based on an assessment of the impact on employment and on the overall performance of the economy. So I think that it's not such a hot issue, actually.
And last question on the growth target. It's been cut to 0.5%. We've got unemployment at about 30%, consumer sentiment at some of its lowest levels ever. Do you expect a 0.5%? Is that a reasonable outlook for GDP growth? Have we bottomed out in terms of the growth picture for South Africa for this year?
Well, I think there's a few things going on the plus side. We had a drought last year. We've got less of it at least in large parts of the country. One part of the country has still got a continuing drought. But indeed, there are some very, very serious challenges, and they do require that we make structural changes in our economy. I think everybody understands that. Those structural changes have got to move us into a different place in value chains, and they've also got to promote greater inclusion in the economy.